Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer. I'm Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets?
Yeah, thank you, Jeremy. Thanks for our listeners jumping on the call. Um, Basically, we saw the U.S. Markets, the indices, if you might, stabilizing a bit with some marginal gains after the Federal Reserve kept interest rates steady, but at the same time downgraded their economic outlook. So we did see energy and the financial sector outperform. We looked at crude oil, that rose about 1.5% due to some Middle East tensions and some OPEC plus production cuts. Gold hit a new record at just over 3,000 per ounce. Treasury yields, now they fell after the Fed revised their inflation expectations upwards and projected a little bit slower GDP growth. We go over to retail sales, that increased about 2.2% for February. Now, housing, single-family housing starts did rebound, but permits for future constructions did fall. Now, internationally, we did see Germany approve some fiscal expansion plans. UK's Bank of England kept interest rates unchanged. Japan held interest rates steady. Now, the core CPI was stronger than expected. In China, their retail sales did rise about 4%, and their industrial production grew about 5.9%. Now, kind of looking at the week ahead here, we'll be looking at some global flash PMI survey numbers. We'll be looking at some U.S. economic data rolling out. So that might be the PCE index. It's a new and pending home sale and some consumer confidence, durable good orders. And then we'll see the Q1 GDP estimates. And we'll possibly see some revisions here. What degree, we're not sure on the consumer sentiment figures. Now, tariffs, well, we got continued rhetoric from the White House on moderating, not moderating, maybe being flexible, not flexible, but all in all, that's rolling out on the reciprocal tariffs, rolling out on April 2nd. And overseas, we'll be looking at Germany's business consumer sentiment numbers, UK's monthly CPI figures, and Japan's statement from their central bank, their BOJ summary of opinion will be out. Jeremy?
Gotcha. Well, Graham, I had a question. I know throughout the community and some of our conversations with, quite a few of our clients recently, a little bit of a pessimism, a little bit of sentiment there. How are you handling those conversations in the community with our clients right now with the market volatility?
Yeah, no, I think that's a great question, and we're always going to be climbing a wall of worry, right? If it's not this, it's that. But this one, is a little unique. We have an administration that takes a bit different approach, and seems like they're trying to do a lot all at once. And that is putting some anxiety, not just with the consumer out there, that's putting anxiety with CFOs, CIOs, CEOs of corporations and their spending. So I think, a moment of a more prudent stance, being a little more moderate in our thoughts, is reasonable. Expecting more volatility. We said that at the beginning of the year when we did our end of the year, first of the year kind of thoughts that we expected more volatility. We are also expecting maybe a bit more of a slowing growth in the economy as the consumer starts to pull back their spending patterns, if not companies, with some of the concerns with tariffs. What role will that play? Also with government downsizing, what role will that play? So I think overall, we're just saying expect more volatility. Don't panic. That's never been a strategy. This too shall pass, but just more of a moderate year, a bit more volatile year. And I think one thing that's kind of risen to the top with some of our pre and post retirees, not to mention some of our clients that need funds for a short-term need, we're saying, like, listen, take a little profit in some areas. It's okay. Don't change your plan and strategy. Just around the edges, and put that into some ultra secure money market type vehicles for that ultra short-term need, or raising a little extra cash for that monthly distribution, quarterly distribution that you might have. Again, it's not meant to panic, but just be mindful and accepting that things aren't as good as they were, with the anticipation they will be better in the long run.
Gotcha. Well, Graham, we always appreciate the information, the expertise, and thank you to our listeners that jump on the call with us every single week. And we look forward to seeing you next week.
Take care.